What's going on, everybody? And in this video, we're providing a state of the market and stock picks for January 11th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So let's dive right in. Powell this morning came on at 9 a.m. Eastern Standard Time. Really didn't have anything different to say. So being said, they are pricing in. I know some of the banks today came out. Shout out to Ray Savage for his insight. So if you are hearing this, there's your shout out. Nonetheless, I love you, brother. But nonetheless, he was sharing some information essentially about banks and the odds of them going over 6% interest rates, which is interesting to see because we are quite a ways away from that currently. And so if this does happen, I can see the market essentially almost imploding on itself. That means essentially the Fed just doesn't care, and they want inflation down to something we've talked about. They want it down to back to 2% as quick as possible, with the understanding that we won't hit 2% exactly, but 3 or 4 is good enough. But we still got about 3% we need to take off the top. Again, hoping that inflation comes down that far, hoping that this next report, inflation is continuing to come down. Again, I emphasize that because if at all inflation does decide to push back up, it's going to reset the clock in the things that we're currently talking about. Mean nothing because the clock is reset and now it's back to full focus on inflation again. So we don't want inflation to spike its ugly head. And again, it really just depends on where that next inflation spike could come from. And so considering that everybody's already soaking, again, all their resources into just food and rent, that this is why inflation is coming down. And again, we're continuing to see good paying jobs. All these people that have these high paying jobs are losing their jobs, but you're getting an influx in travel and leisure in jobs. And so that's where you're kind of seeing these massive growth numbers coming up. So as far as the jobs and understanding that where that pay difference is when you're looking at that specifically. So again, a lot of people still have to come off of severance packages. A lot of those haven't been considered yet. I think on the next non-farm, you'll see that. We're going to start getting into bank earnings, like I said, at the end of the week. But ultimately, again, that core inflation is going to matter. Tomorrow, I wouldn't be surprised if the market doesn't move and stays relatively flat going into Thursday morning. Now, if inflation does find its way down into the sixes, I do believe that's going to pump us up straight into that 4K mark. We got a pretty clear shot. The market doesn't want to sell off. So we got a pretty clear shot going into core. One thing to consider is we've had a pump just like this and then turn around and sold off heavy. And I'm kind of thinking that's going to be the same thing. We're going to get a nice pump here, hit 4K, and then potentially sell off. Maybe we get up to 4K in the next 2 days. Again, I think if inflation comes down, that bring more hopium back in the market. Again, hopium is very potent in this market. So if inflation continues to come down, you'll see a nice pop, I think, up to 4K. And then if banks do well, you can see a continued run and a pretty big rally, I think, at that point, kind of feeding into essentially the Christmas rally that we didn't have. So, but being said, if inflation is coming down, but banks do horribly bad, that's going to stall us around the 4K and potentially cause us to chop, I think, in my opinion. And then again, bad if inflation stays within 7, starts rising a little bit, causing concern, because that means that Fed is going to or could potentially start hitting harder again and staying at 50-point basis moves, maybe even 75-point basis moves again. And that's the last thing people want to see. And so, again, if by all means, if that inflation, that core inflation starts creeping back up, um, again, that's going to stir a lot of panic in the market. So that is something that will always have weight until it gets back down to normal levels, which will take some time, even with the Fed continuing their tightening process right now. So it will be interesting to see what happens in the next couple of days, but it's going to be big and pivotal. So tomorrow, again, I'm not really expecting a lot from tomorrow going in. I do believe we could potentially run back up to yesterday's high of 39.51, which would essentially put us something I've been talking about. Like we've been kind of playing kind of into that 3900 4K zone now. I wouldn't be surprised if we play that range. We're kind of a little seeping over a little bit here. It's giving us the 3878 and that 3960, so almost about a 100-point range. We broke out of this 100-point range into this 100-point range, and I think we'll stay there until we figure out fully what happens with the banks on Friday. That's not saying if we have a good core, I still think we could hit 4K, and then we top out at 4K, and then they would be riding purely on what happens with the banks at that point going into Friday, if it does cause us to break out or not. So that's kind of really what I'm watching on the general index. Bitcoin, again, showing strength just like the market, but your top here again, 18K. Again, heavily reliant on what happens with the next coming days. If inflation's bad, consider this selling back off, making new lows. I don't think the market will make new lows unless if inflation gets out of hand, then it very well could. I mean, we could start selling off, but this is going to guide run in parallel with a market, in my opinion. The dollar, again, good to see it. The bulls, you want it to break this 102. If you can break the 102, I think the bulls can really run. But again, on the same token, if this thing pushes right back up into 5 and break back up above, you're going to get a pretty big flush in the market at that point, in my opinion. So we'll have to see how that does work. Again, these don't always work. They don't run in parallel all the time. They don't run opposite of each other all the time. It just depends on the current market sentiments. So we're going to have to see how that does play out. But Tesla, interesting. It's continuing to consolidate around this area, which is nice. You're kind of looking, it's a big range again, 123 down to the 103. So it is consolidating in this big range, much like the market's been playing about a 100-point range. So we're really kind of watching this here. Again, it's getting closer and closer. That daily EMA is creeping down closer and closer. Again, you've had a huge gap from when it hasn't touched this daily EMA. So when that does touch, you're going to get a hard rejection off that. Whether that's into the rally, maybe we get a good report and good bank earnings, maybe we get a good rally, and this thing's going to reject hard off that. And then potentially it may only be a one-day rejection and then start pushing up if the market really wants to rally at that point. But again, it all depends on what's going to happen in the next couple of days. Apple's recovering really nicely here. Had that break and pull back. Now we're starting to push up. So we continue to see we have another level here at the 135. Again, this could be the hard rejection here as well. We did reject it somewhat off here. We'll see if we get up here and we just can't hold it, and then we make a newer low and we just start dying off again, a higher lower high, and start just continuing to sell off. So watching that closely. BA, again, very overextended. It actually broke down and retested. Does that mean value is going to start selling off tomorrow? Again, you don't want value and don't want banks to roll over because there hasn't been any strength in tech. And if tech can't pick up, there's going to be absolutely nothing holding the market up, and we're going to come down pretty quick because essentially value and financials just they have a lot of meat on the bone, and they could just absolutely get obliterated. So just kind of really watching that. But again, you got support here at the 192. You got support here at the 175. and then you got a pretty big gap. You can fall here, so watching that closely. JPM again playing this range, looking for it to break out the 139. If the markets get good inflation, this might start running up. And on the same token, they get a bad earnings and then turn around and start selling off. Again, you don't want this thing to break 130. Again, you got a huge gap that you have like no touchbacks on this push up here. Again, very overextended move. The market will take all this back is what I'm thinking. Maybe not the whole move, but especially this move from 117 up to the 130. I think the market is priming to take that chunk of it back. And so I think by the time, again, like I said, once this is all over and done with, I think JPM will be around this area again here very shortly coming up. So, and that's the problem, is a lot of people are trying to gauge the pivot. So it seems like we get a lot of big rallies, and then what happens is, again, the Fed hasn't changed their tone. And so when the Fed comes out and reiterates what they've been reiterating for the last 6 months, the market throws a fit, and then it starts selling off again. And so this is why you have to be very careful on these pumps, because they don't last very long, and then they turn around and start selling off pretty heavy. So with that being said, yeah, JPM, interesting spot moving forward here. So GS, again, starting to try to rally here. Again, if we could feed into a pump in which this pumps back up to or close to 375 going into Friday. This is the earnings rally it's getting, but again, if it's bad, inflation is worse or better, it's all going to gauge on how this thing's going to play out. But I think we could get a potential little pop. Like I said, I think the market general index could pop up to 4K, and then that would kind of lead us into inflation. Maybe we do get a pop into tomorrow, considering we tried to sell off, but we couldn't sell off today. The market bounced right back, and it is priming to try to go higher. So again, we could get a nice little pump, and then bad inflation report and just sell off, or bad banks and sell off, or maybe good banks and good core inflation could cause us to break back up over this, and this could be a higher low. So a lot of different scenarios, and you should always be looking at the different scenarios and not just be one dimensional. If you're overly biased on the bull side, overly biased on the bear side, again, it's been a battle, and we won't know for sure until there's going to be a big event, whether that is a black swan event that will send us to new lows, or essentially, in my opinion, the way things are going to get better is when the Fed just stop having rate increases, which again is something they are not projecting to stop, at least for the next 2 monetary policies, if not more. Again, all pending on how inflation is. I think if inflation can come back down into 6, I think they'll still have another 50-point basis move on the 1st of February, and then potentially 2 other 25-point basis moves. Again, all depending on what the core is looking like and how quick that's coming down. So again, there's a lot of what if scenarios, and you should know all the what if scenarios and be very adjustable in the markets. Again, overall sentiment, I think once we do stop raising rates, I think the market will start to rip. But once you start doing that, you have to realize that you are also toying with the fact that inflation could come right back into the picture, and that's what the Fed had been trying to fight. And so they've been really tightening pretty heavy, maybe more than it needs to be. It's really hard to say because inflation isn't coming down as quick as they would like it to. Although we've had a couple of months of improvements, the world seems to have been showing signs of improvement on inflation, but it's still very high. Just because there's an improvement doesn't mean things are better. It's still too high, and so that's the problem. Is how quick can we get this thing turned around before we can stop the pivot and be okay and have normal cycles again. And again, the market will bounce back a lot quicker than the economy, right? So just always be mindful of that. The market can still rip. But even to try to gauge that pivot is too hard right now. There's just too many more increases on the horizon. And the Fed have been very transparent about that. That hasn't changed. But a lot of people, economists and everybody else, are trying to gauge a pivot and try to provide hopium. Which, on the same token, you can see why they do it. You don't want to be a doom and gloom all the time. If you crush everybody's hopes and dreams, people are just going to pull out all the money, and you don't want that either. Banks, you don't want people pulling out their money because it's not going to help your scenario, right? And so, yeah, that's where we're at. And tomorrow, again, not expecting a whole lot. Just waiting for core and TCM earnings on Thursday morning, and so we'll see how that plays out. So if you made this far, go ahead and drop a like button. Until next time, I'll see you later.